Hello grade 12s. I'm now doing task 12.10 in your textbook. Okay, now task 12.10 is quite a bit detailed. I'm just going to do it so that you can get a general feeling for this, but it's not typical for exams. The first thing we need to do is that if you look on page 493 and 494 in your textbook, you've been given a whole lot of journals, so CRJ, CPJ, etc. And there are some missing figures on those journals, and we need to calculate those figures. Before we do that, I just want to give you guys a quick note on our normal ledger accounts, which ones always include VAT and which ones don't exclude VAT. Okay, so those which include VAT are bank, okay, because you always receive or have to pay the full amount. Debtors control, same reason, when our debtors owe us money, they owe us the full amount including VAT. Creditors control, when we owe our creditors money, we owe them the full amount including VAT. And drawings, because when the owner takes goods for personal use, then obviously the drawing, the VAT is included in that figure. Now the figures that exclude VAT are basically the figures that come, all your income statement figures basically exclude VAT. So sales must always exclude VAT, and trading stock must always exclude VAT because trading stock is recorded at cost price. And if you take the VAT amount together with these amounts, it adds up to the inclusive amount, right? So you can just keep this as a note so that you keep that in mind. Okay, so in the info, we've got this is for red berry stores. They use a markup of 33 and a third percent on cost, and we'll obviously need to use this markup when we're calculating some figures, missing figures in the journal. Then in the information it says the following balances appeared in the general ledger amongst others on 1st of January. We've got the balance for VAT output and VAT input. So you can go to your VAT output and VAT input ledger accounts and bring down the balances. Remember, VAT output is a liability, so your balance will be brought down on the credit side, 4,200. And VAT input is an asset, so the balance will be brought down on the debit side, 3,600. Okay. If you go to the next question, so let's find it. 12.10.3, you have to do the VAT control account. And you can see I've set up a standard format for the VAT control account because this is how it's always going to look. You're going to have your amount for the VAT output on the credit side and your amount for from the VAT input on the debit side. Obviously, we don't know which side will be bigger, so we can't put the balance in yet, but we will do that later. Okay, so going back to our journals, the first journal we're going to start with is in the CRJ. And in the CRJ, we have three figures missing. The one is bank, the sales, cost of sales, okay, and then fee income. Now, we've been given the VAT output amount, okay, and the VAT output amount is basically calculated on the sales and on the fee income. So what I'm going to do is the fee income excludes VAT. The 16,600 excludes VAT. So I'm going to calculate the VAT portion on 16,600. I'm going to multiply that by 15%, okay, to get the answer. Okay, so 2490. Yep, I'm then going to take the VAT output amount which you've been given, 11,200, and subtract 2,490. Okay, that gives us a figure of 8710. Now the reason I've done this is because the VAT output is calculated on the sales and on the fee income. Okay, it's not calculated on the cost of sales. Reason is that the purchases, the VAT on the purchases will come from the CPJ, the CJ, etc. Right? So the VAT is basically just for the sales and the fee income in the CRJ. Okay, so by calculating the amount of VAT for the fee income and then subtracting it from the VAT output, I now have the VAT portion which was allocated to sales. Okay, now the sales amount excludes VAT. So remember that this amount, some figure was taken and multiply it by 15% to arrive at 8710. So to get the sales amount now, okay, I'm going to say 8710 divided by 15%. Okay, and I'm just going to do that calculation. 8710 divided by 15%. So 58,067 is your sales amount. Okay. And once you've got the sales amount, we can very easily work out the cost of sales. Okay, because 58,067. Oh, sorry, this calculation was actually for sales. Okay, so that was for sales. We can now work out the cost of sales. So I'm going to take my answer for sales. Sorry, it's all over the place here. Okay, so 58067. Okay, and we're going to calculate it using the markup of 33 and a third percent. So you're going to multiply it by 100 and divide it by 133 and a third. I'm just going to put 0.33 here. Okay, and we're going to calculate that answer. Let's provide a few figures here. So we get an answer of 43,550 for cost of sales. Okay, now to calculate the bank figure. Now the bank figure is the amount of money that the businesses actually received. Now remember, they received their sales amount, they received their fee income amount, and they received the VAT amount. So they're going to basically receive 58067, the sales amount. Okay, 58067. They will also receive the fee income amount of 16,600, and they will receive the VAT amount of 11,200. So that's our calculation there. Okay, now actually I'm just showing you all of the calculation, but the only one we are actually interested in is the VAT output, because the VAT output amount will go to the ledger accounts that we're doing. We're not really interested in bank sales and cost of sales, but this is just an extension exercise to show you how these calculations would have been done. Okay, so VAT output from the CRJ. We're going to go to the VAT output ledger account. On the 31st, our details will be bank. If you want in brackets, you can put sales. The folio is CRJ. And we just need the amount of the VAT output, which is 11,200. Okay, so that's much less work than what we had to do out there. Okay, then the next journal we're going to look at is the CPJ. Now in the CPJ, you have to calculate the bank amount and the VAT input amount. Now we're going to have to calculate the VAT input amount first because the bank amount needs to include that. Remember up here our note says that including VAT is bank, debtors control, creditors control, and drawings. Okay? Okay, so let's calculate the VAT input first. Okay, so there's a note just under the cash payments journal. It says the VAT paid on equipment, stationery, and motor expenses can be claimed back from sales. Okay, so if we look at equipment, stationery, and motor expenses, okay, but not on the creditors control payments. Okay, now the VAT can't be claimed back on the creditors control payments because the VAT was already claimed when the purchases were made from the creditor. Okay, so basically in order to calculate the VAT input amount, I'm going to take the trading stock amount, 43180, plus the equipment, 8090, plus stationery, 2480. Okay, and then I need the motor vehicle expenses. So if you look at the sundry accounts, the amount is 2,900, but it's got a note that says next to it 1. And if you look underneath, it says motor expenses are 1,100 and drawings are 1,800. Now this is cash drawings. We can't claim VAT back on it. So it's not going to be excluded from our calculation. So we can only use the 1,100 of the motor expenses. Okay, and once you've got that, all of those figures exclude VAT. So you're going to then just multiply it by 15% to get the answer. Okay, I'm just going to round that off. Okay, so 8228. Now the bank figure will be all the amounts that we've paid out, including the VAT. So for bank, we're going to say 43180 the trading stock, plus 8090 the equipment, plus 2480 the stationery, okay, plus 19860 the creditors, plus 2900, and plus the VAT we just calculated 8228. Okay, so we'll take all of that and work out the answer. Okay, so we get 84,378. Okay, now the only figure we're interested in is the VAT input, which is 8,228. And we're going to take that to our VAT input account on the debit side. Okay, it's going to get the figure from there. Okay, our details of the bank. This is various things. These are various things we've purchased, so I'll just put bank without any other further details. Okay, then if you turn over the page, the next journal we're calculating for is the petty cash journal. Okay, so in the petty cash journal, we have to calculate the VAT input and we also have to calculate the casual wages amount. Okay, so in the note says VAT paid on consumable stores and sundry expenses can be claimed back from SARS. Okay, so to calculate the VAT, we're going to take the trading stock amount, 900, plus the consumable stores, 180, because we said VAT can be claimed back. VAT cannot be claimed back on wages because wages is already subject to PAYE, etc. So we don't worry about wages. And they said the VAT can also be claimed on sundry expenses. So those three figures, and you're going to multiply them by 15%. Okay, so 183. Okay, then in order to calculate the casual wages, you see you've been given the total of petty cash 2840. Okay, we know that included in there is the 183 VAT because that total always includes the VAT. Included in there is 900 for trading stock, 180 for consumable stores, and 140 for sundry expenses. So the difference obviously just belongs to casual wages. $1,437. We don't care about the casual wages for our ledger account. We do care about the VAT input, 183. So we're going to go to the VAT input ledger account on the debit side and put it in there. Okay, and our details will be petty cash from the PCJ. Okay, let's go back to the top. Okay, now calculating for the debtors journal. Okay, debtors journal. Okay, in the debtors journal, we're missing debtors control, we're missing VAT output, and we're missing sales. Okay, so first we're going to calculate sales. Reason is we've got the cost of sales, and we can just mark it up in order to get the sales amount. So we've got 37380. We're going to multiply it by 133.33 and divide it by 100. Okay, I'm just going to round that off, so that's going to be 49840, I think. 49840, right? So we've got sales. Okay, after the sales, we can now work out the VAT output. Now this 49840 sales, remember sales excludes VAT, so we can say 49840 just times 15%. Okay, and then the debtors control amount is going to be it's going to be the sales amount 49840 plus the VAT amount of 7476 because the debtors are owing us the full amount including VAT. Okay, to post our ledger accounts, we're interested in the VAT output amount of 7476. So we're going to go to the credit side of VAT output and place it there. So 7476. Okay, our details will be debtors control. This is for sales if you want to say. Okay, and the folio is TJ. Okay, then we go into the debtors allowance journal. So in the debtors allowance journal, we again missing three figures: debtors control, VAT output, and cost of sales. We can work out cost of sales first because we've got sales given to us. The debtors allowance is given to us. So this one is say 4,900 multiplied by 100 divided by 133.3. Okay? You can obviously get more accuracy with your calculators because you can use your fraction function. Okay, so cost of sales is done. VAT output. Okay, look at the debtors allowances amount, which is 4,900. Okay, now that amount excludes VAT, so we're just going to say 4,900 times 15%. So 735. And the debtors control will be the debtors allowances amount of 4,900 plus the VAT amount of 735. Because debtors control has to include VAT, because the goods which are returned are now not, the debtors not owing us the VAT on the goods which were returned. Okay, out of these three, we're interested in the VAT output of 735. Okay, now remember, VAT output, normally we credit it, but this time we're going to debit it. Okay, and that amount was 735. The reason we debit it, this is a return by a debtor, so it's the opposite of a normal credit sales transaction. And our details here will be debtors control. Okay, if you want in brackets, you can write return or allowance. So that's from the DAJ. Okay, then let's look at the next journal, which is the CJ. Okay, so in the CAJ, VAT paid on equipment and consumables can be claimed back from SARS. We're missing the VAT input amount and we're missing the trading stock amount. Okay, but we have been given the creditors control amount. Okay. So let's see how we can calculate that. Okay, so because it says VAT paid on equipment and consumables can be claimed back from SARS, and VAT paid on trading stock can always be also claimed back from SARS. So that means the 34519, which is the amount of creditors control, basically includes VAT at 15%. So that's all I'm going to do is just calculate it. So we can work out the VAT input easily. We're going to say 34519, okay, multiplied by 15 over 115. Okay, because the creditors control balance always amount always includes VAT. So 34519 times 15 over 115. So give us our VAT input amount. Okay, and then the trading stock balance is missing. So I'm going to start with 34519, subtract the VAT, so we get rid of the VAT, and then subtract the other figures. So subtract 4320 and 1400. 24297. We're not interested in that, we're only interested in the VAT input, so 4502. It's going to go to the debit side of the VAT input account. And our details will be creditors control from the CJ. Okay, the next journal is the creditors allowances journal, and there we're missing the creditors control amount and the VAT input amount. Okay. So the VAT input amount, the only thing that they have returned is trading stock. So all we need to do is to work out the VAT input is take the amount of trading stock 1,800, which excludes VAT, and multiply it by 15%. So 270, and the creditors control amount will be 1,800 plus the VAT of 270. Okay, we're interested in the VAT input 270. Now remember, this is an allowance, so it actually decreases the input. So we're going to put it on the opposite side, not the debit side, we're going to put it on the credit side. And what we return was trading stock, but the details will be creditors control. If you like, you can put in brackets return. Okay, and the amount was 270. The folio is CHA. Okay, then we've got the general journal as well. Now in the general journal, there are two figures which are missing. The one being the VAT input and the trading stock. Okay, so if you look at that transaction, it's a transaction for drawings. And if you look at my note on the top, we said that drawings always includes the VAT. So 1,200 includes VAT. We're going to extract the VAT from it. We're going to say multiply by 15 over 115. Okay, and then the trading stock amount will be excluding VAT, so we're going to calculate 1,200 minus 157. Okay, now for this transaction here, we're interested in the VAT input 157. Okay, and if you look at the general journal, VAT input was credited. I'm sorry, they've actually made a mistake there. That was actually supposed to be VAT output. Because when the owner takes goods for personal use, it's recorded as VAT output. Okay, but if you look at the journal entry, VAT output is credited. So we're going to go put it on the credit side of VAT output. Your details will be drawings. Okay, and the folio is GJ. Please change that in your textbook. And the amount is 157. Okay, the next journal entry. The journal entry is debit, ACE regular debtors control, and credit interest on overdue account. There is no VAT attached to that, so we do not have to concern ourselves with that. Okay, so now all that's left to do here is to close off the VAT output account to VAT control. Okay, so we're just going to total up the credit side, put the answer in on both sides, work out the difference, and the difference will go to the VAT control account. So 22298 is on the credit side of the VAT output account. It will go to the debit side of the VAT control account, which we're doing in 12.10.3. So I'm just going to scroll down to it. Okay, and then we're going to go to the VAT input account and do the same thing. Here we're going to total the debit side first and put that answer in on both sides. Okay, and work out the difference. And this difference will go to the VAT control account in the GJ. Okay, so 16,243 on the debit side. Okay, and now if we look at our VAT control account, we need to look at which side is bigger. Okay, so the credit side is definitely bigger. So that means that we are owing SARS the money. So the balance will be payable to SARS. Okay, so we're going to just say balance carry down. And then on February the 1st, it will be balance draw down. Okay, now 12.10.2, I've ignored it. It says draft the journal entries to close off the VAT output and the VAT input accounts. Okay, now those journal entries are not very involved, okay? We just have to close off the VAT output and the VAT input accounts. Okay, so the VAT output, okay, VAT output, if you look at our ledger account, okay, the balancing figure was on the debit side. So we're going to debit VAT output and credit VAT control. So that's all the journal entries. Debit VAT output, okay, and we're going to credit VAT control. Okay, with the amount that we had, which was 22298. Okay, and if you want a narration, all you'll do is say closing transfer. Okay, then the same thing for the VAT input. For the VAT input, we debited the VAT control account. Please remember for exams, these journal entries are not very important, so don't concern yourselves with it too much. Okay, so we're going to debit the VAT control account and we credit VAT input. Okay, and same narration, closing transfer. Okay, all I need is the amount, the VAT input, just 16243. Okay, that's it for this question. Thank you guys. Goodbye.